What is going on, guys? Welcome back to another video here on my YouTube channel, Forex with Cody. And today we're going over, as usual, again, gold GJ trades taken yesterday, which was Thursday, the 8th of February. During so from Asian session through to New York session, we was looking at the markets, looking for setups here on gold and GJ using the type 3 candle pattern and also breakouts and the scalping strategy. All the different strategies shown and taught within the academy is what was used yesterday. And here you can see the results. This was posted in my public Telegram here. So we had gold, GJ, a break-even trade on gold, and then another trade on gold late on in the evening for a total profit of $2,943 on the day. Beautiful. So basically, this was what the day we were talking about here yesterday, right? So the 8th of February here. This is GJ. This is the first trade of the day that I took. And basically, I was just looking for continuation on the daily candle, right? If we go to the daily chart right here, we can see, that's just the engulfing candles. We can see here that we had an engulfing candle on the daily time frame. So this was the day, the time frame was... the day we was looking at, right, was the Wednesday. That's the candle we was basing our trades off of for the Thursday. So Wednesday we had a nice bearish engulfing candle, respected the lows, broke the highs, closed beautifully, nice and strong, not much of a top wick, giving indication that price is going to continue in this uptrend here on GJ, right? This short term uptrend right here. So from this point up to this point, after some consolidation, some ranging in the market, price has created this support, right? Very key support here on the daily time frame that price is respecting and failing to break, and then came up and made a higher high over here, right? So we had highs, higher lows, higher lows, higher lows, and price has continued the uptrend now and broke those previous highs. So from the daily perspective, of course, everything is bullish, and then we finally get some bullish price action. Like I said, bullish engulfing candle, nice strong bullish daily closure. And so down onto the 4, you can see that Thursdays right here, so yesterday opened up, right? We had a nice 4-hour candle wick down into one of my zones right here, closed above the previous daily high, right? So closed above and continued bullish. So where I looked for my entry was, if we look over here on the right hand side on the 1-hour time frame, if I turn on the sessions indicator, we can see where the purple zone starts. That is the start of Asian session, so that's the start of our new daily candle. You can see that price opened and came straight back down into this area of interest, right? My area of interest here. Rejected the midpoint of this zone. So you can see I've just got the middle line ticked here on this rectangle on the swarm resistance tool. And you can see 1 rejection, 2, 3, 4 rejections of that level. Strong rejections as well, right? Wicking right down into the bottom of this level before closing back above this level here. And then price continuing bullish. And basically we had a daily high, so the previous daily high, that is Wednesday's daily high. And then we had, you can see here it says 12 T3, right? This is a 12-hour type 3 candle pattern, and that is based off of my indicator and price action. You can see here, if we go down to the up to the 12-hour time frame, you can see this green buy signal, right? And that is indicating from the price action beforehand that we have a bullish setup based on my strategy, the type 3, lining up with the daily bullish daily candle, bullish trend, a nice previous bullish 12-hour closure, right? Price creating lows, highs, higher lows, higher highs, and then anticipating that price is going to break that daily high, as well as the 12-hour type 3 candle pattern setup, as well as retesting this point, this key level in the market with some nice rejection, and then moving up. If we go down onto the 5, I was looking for around about 10-15 pips above this level just to get in and out, especially during Asian session. I'm not looking to stay in the market for too long during Asian session because you can get some sideways movement, not always, but generally. And you can see here on the 5 price retesting this level beautifully with a lot of rejection in there. And then you can see a break of structure. We have this lower high right here. Price then comes up, breaks and retests it and starts moving to the upside. Rejects the daily level as resistance, pulls back, and then starts to gain that momentum again. Starts breaking this daily high. I have my buy stops just above this daily high. I think three or so pips. If I measure this out, you can see, yep, around about 3 pips above that daily high. I had a buy stop. Price triggered in. I put my stop loss below that candle, the 5-minute candle here. And then targeted around about 10 pips, but did go up for 15 to 20 pips, I believe. Yeah, 20 pips. But that's the first trade. You see, or the GJ trade right here, right? $516.43. That's that trade right there. So multi-time frame analysis going down from the daily, the 4, the 2, the 1, and the 5-minute, looking for entries on the 5-minute to get that quick move in and out. And then the rest were taken on gold. So if we go over to gold here, again, if we do the analysis, we go to the previous day. So this is the daily candle that we traded right here. And you can see the previous daily candle was closed bearish. Did wick up and break previous daily highs, but it did close bearish. So with that being said, my bias for the next day, so yesterday, Thursday, was that I'm anticipating a bearish move. But first of all, we have to anticipate a pullback, right, to make the daily candle top wick. And this is what I say to my members as well. Most daily candles, if you just take a look on this chart, most of them, right, probably 90% or maybe more than 90%, have a top wick and a bottom wick, right? They all have top and bottom wicks. So you can anticipate that if the previous daily candle, so this daily candle right here, let me just get rid of everything. Let me just get rid of all, right? So this daily candle was the candle that we was going off to trade this day. And if price is going to continue bearish and line up with that previous daily candle, at some point you can expect, due to past data, right? If you just look back for years and months and weeks, you can see mostly all daily candles have tops and bottom wicks. So if it is going to continue bearish, what we want to see is a top wick being formed before it continues bearish, right? And that is what I was anticipating here early in Asian session. Where are we here? Early into Asian session, right? And this is where I took this trade, the 15 pip trade, which is this one right here. Sorry. So this was the first trade. This was the second trade. So this one right here, I was anticipating, you can see the buy. I was anticipating price moving bullish, creating a top wick and retracing into my key level, right? The key level right here. And you can see as soon as it taps the mid-range of this key level, price reverses, right? And drops like, it drops from the mid-range, it drops 94 pips, right? And you can see these candles in here. You can see that these candles, they're all rejecting this level, this overall resistance level. But as soon as price taps into that mid-range is where you see the reaction, right? You can see all these candles in here rejecting. No volume, no direction at that point, no move, right? Just consolidating. Price then spikes up, taps the mid-range, and then you see that move down, right? So very key levels, and important to understand your ranges within those levels. You're not just drawing a support or resistance and waiting for price to come to it. You're looking for an exact point for price to touch into that support or resistance level, yeah. And then, so where I got the entry was, so this is the daily, anticipating a pullback into this key level. You can see the level over here, resistance, 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 resistance. And price opened up here for the daily, the first 2-hour candle, closed bullish, and it was a bullish engulfing candle, right? So that was a significant indicator to me that we're going to potentially see that pullback into one of these key levels. I don't know what just happened. We're over here. And also on the 1 hour time frame, you can see that there was a buy signal. This is a type 3 setup. So we had a bullish engulfing candle on the 2 hour, and we had a type 3 setup on the 1 hour. And then you can see price comes up, taps into the mid range. I get my 15 pips. Price then reverses, right? So that was the first trade, anticipating a pullback, closure above this level right here, key level, bullish engulfing on the 2 hour, a buy signal from the indicator on the 1 hour, anticipating price to come up and make a top wick into this range, right? And if it doesn't come up into this range, we can look up into this range or into this range, and then anticipate a sell from there. Wasn't able to catch a sell from these levels because price didn't really give me an entry from this point, right? From the 1 hour or the 2 hour, price just literally tapped it and then reversed quite heavily. There was no real entry for me within this area, but I did get my break even entry down here, and for that, basically, once price made that pullback, tapped this mid range, rejected this key level, price started pushing down quite heavy here. We see the volume, the momentum, right? Then price pulls back. I had another key level here at 2033951. If you look to the right, 2033951. Price closed below it, rejected once, twice, 3 times, 4 times, right? So we broke, retested, lots of rejection wicks, and then price started moving to the downside quite heavily here, right? We see this candle coming in. We had an 8 hour type 3 bearish candle pattern setup. If I go if I go to the 8 hour time frame here, you can see we had a sell signal right here, right? And then price just absolutely melted, right? Boom, came down, beautiful. Over 100 pips. Sorry. Got something on my throat here. It's really annoying me. So the 8 hour time frame, rejecting key levels, pushing down, breaking the previous 8 hour low, and also breaking the previous daily low right here. You can see DL, daily low. So that is where I decided to go and enter a trade here. If we go down to the 5-minute time frame, you can see price coming down on the 5, right? We closed below the 8 and the daily right here with this nice candle. So you can see rejection of the 8 hour level, closure below, right? And then this next candle comes and breaks it. I entered here. I did see, I think, 11 or so pips profit. No drawdown. So yeah, 11, almost 12 pips profit, but I was holding out for 15 pips. Price then came and hit my break even. I moved stops to break even, of course. Once we started pushing down here, close to take profit, move stops to break even. Price then wicked out and came and hit break even. So that was the break even trade right here. This one you can see gold sell 5. You can see no profit or loss, and that was break even. So that's anticipating again. Retracement had been complete. Rejection of key level, bearish momentum, bearish price action. So the 8 hour type 3 bearish candle pattern setup. And then we look to break these key levels, the 8 hour, the daily, and get in for a quick 10-15 pips. So that was the plan there. So break even. And then what happens? Price comes all the way back up to this key level that we rejected before, right? And look where exactly it comes into, the mid-range point, right? Price comes in here, doesn't touch the mid-range. Then this candle opens up, touches into the mid-range, show that purple dotted line. And then again, look what happens from that mid-range point. Same over here, right? This from the mid-range point over here, price melted 94 pips. Same thing happened again over here, right? But this time it went for more. So again, we tapped into that mid-range point. Price dropped 182 pips from that point. So again, I wasn't able to get entry in here, right? But I was able to get an entry down here again. If we look over to the 2 hour time frame here to the left, right, we can see price taps into that mid-range and boom, bearish engulfing candle, strong rejection. 2 hour now closes below the 8 and the daily low. So over here you can see that we didn't get a closure below at this point. right? We just had a rejection down, that previous one, closed back above. Now we have a closure below, a bearish closure below. So anticipation, now that we have respected all these levels, we've grabbed all liquidity from in here, we've drove down, we've now closed below the daily lows, giving strong signals that price is going to continue bearish here and create a lower low. Exactly what it did. Price drove down 76, 77 pips. And so where I looked for my entry was once this 2-hour candle closed in here. And if I go over to the 1-hour time frame as well, right here, we can see we had a 1-hour closure. You see rejection, 1-hour closure, 2-hour closure below this level. And as price started breaking this previous hourly low, I hopped in right here. You can see price then rejected, came back up. I had my stops above this previous 5-minute candle high right here. Price closed back above, then came back below, and eventually came down and hit my take profit for 20 pips. So that was the trades, and that was the last trade right here, $1,332.22 for a total of $2,943. So you can see how lining up the daily, the 4, the 2, the 1, right, starts to all flow, starts to connect and glue together. And then putting it with the 5-minute entries is very powerful. You get tighter stops. You can target your, you can even target a 1 to 2, 1 to 3, whatever you want to do, right? I like to just get in and out. I don't have time to sit there and watch the charts all day. I have things that I need to be doing. I have a family. I have a daughter that I love spending time with and looking after. So I set my trades. I get a quick 10, 15 pips, 20 pips, and then I'm out, right? And then I set my alerts, wait for the next setup, set my sell and buy stops, and then I walk away, go and spend time with my family again, or do whatever I need to do. But that is yesterday's trades in a nutshell. If you guys want to learn this strategy, all these teachings are available in the academy. The link will be down below in the description. And today, currently, looking at, again, if we just go to the daily, right? We always start on the daily. Let's have a look how yesterday's daily candle closed. Again, same as Wednesday, right? Closed bearish, but with a very small candle body. It did close bearish, right? It has now created a high, a low, a lower high, and a lower low, right? High, low, lower high, lower low. So that bearish structure is there on the daily. Strong rejection wick. If we zoom out, not too, there's some kind of support in here, right? If we look at this whole area right here, some support in there. But overall, until we see that these daily candles closing bullish, I won't be looking for any buys. But yeah, beautiful moves, potential sales coming in on gold today. There is, next week, there is obviously all this inflation data on the USD, which is why we could be seeing this, these wicks and these weak body candle closures. Price is probably going to range and consolidate and not have a lot of volume or liquidity until that news drops. So yeah, we'll see what happens today. Obviously, I'll be posting all analysis and updates in the Telegram, the VIP Telegram and Discord. But yeah, that was that. Beautiful trades on gold and GJ. GJ, of course, is looking good for buys today, right? Beautiful daily closure right here. We are at, it is at resistance up in here. But I'm not too worried about that. If you draw the lines from here, right, the actual bodies, if we have a look right here, you can see that this daily candle has closed above all of the bodies, right? None of these daily candles have closed above this level. And that's 1, 2, 3, 4, 5, 6, 7, 8. In 8 daily candles, we've failed to close above, what is it, like 188,250, but now we have a closure above, so we could be creating a bottom wick again. Anticipation for price to create a bottom wick and then continue bullish, and that's what we're going to be looking for here today on GJ, right? So that is that. 20 minutes. hope you guys understood what I was looking at here. Hope you can gain some kind of valuable information or valuable insight into how I trade, and apply it the best way you possibly can. If you have any questions, leave them down below. I'll be sure to answer them. But yeah, don't overtrade, don't over risk, don't over leverage. Stay calm, stay cool, stay collected. And I will see you in the next video.